I would love to hear from our brilliant mind in the capital market desks. I think this is for the first time that we have our very own Alessandro Mondio from the capital markets team. He's our very own capital markets specialist based out of Zurich. So welcome, Alessandro, for the first time in our analyst call. Alessandro, I would love, before going to your part, getting your take, especially from the flows that you see across all these exchange traded funds and products in the US, in EMEA, in Australia. What is your take for the recovery of this asset class based on some of these key indicators that, quite frankly, look almost like on a second basis?
Thank you, Eli. Basically, similarly to what also Max presented, even though the prices were going down at the beginning of the week, investors actually took the opportunity to buy the dip. In Europe, for instance, we saw net inflows on both Bitcoin and Ethereum ETPs. In the US, we saw net inflows on the Ethereum ETFs, while Bitcoin ETFs recorded some minor outflows. But overall, the sentiment seems pretty positive. And also in the next slide, I brought some stats where you can also see how the market really matured and grew during the last year. And so here, as I say, the interest was pretty high. So the trading activity surged significantly. As you can see here from this chart, the Bitcoin ETPs, the turnover was between 4 to 6 times higher compared to the 20 days average. This both on SIX Swiss exchange and on Deutsche Börse, etc. There are the two main exchanges in Europe in terms of turnover for the crypto ETPs. Spread on Monday widened significantly across all the ETPs. However, by 11 a.m., so pretty soon in the morning, the spread already started to tighten, at least on the main coins such as Bitcoin and Ethereum, although they remained above the 20 days average at the end of the 20 days average at the end of the day. But this is also something that we didn't see during similar market events. And as I was saying, signals a more mature market. And also something that really strengthened the case for crypto fees, and is very important to highlight, is that despite all this turmoil and the heightened volatility, the uptime for the ETPs was pretty impressive. The uptime is basically the presence of the market maker in the order book. So how much time an investor could buy or sell the ETPs on the exchange. And during Monday, it reached across the whole range or average at 99%. So this means that investor could buy or sell the ETPs for 99% of the time during the trading hours.
This is really impressive. And it shows, again, an easy and safe access to crypto via ETFs and ETPs, despite the fact that we've seen heightened spreads at the beginning, 4 to 6 times higher. What we've seen here is that actually the market recovered quite quickly, especially given the fact that investors 99% of the time were able to get in the market at a reasonable price and at tight spreads as well, which is really impressive in a market turbulence like the one that we experienced on Monday. What happened to Ethereum as well? Because I think more broadly, crypto, especially Bitcoin, represents over 50% of the entire asset class. But what about Ethereum ETPs, Alessandro?
So on Ethereum, we saw a similar behavior to what we saw on Bitcoin ETPs. The turnover was higher, between 2 to 3 times higher than the 20 days average. So slightly lower compared to the Bitcoin ETPs, but still quite high. And also the spread here widened significantly, as you can see from the chart on the right. But I think that to really understand why the ETPs behave this way, we also need to look at the underlying crypto asset market and examine a bit the factor that affected the liquidity and the volatility.
Absolutely. And what we're looking at on these charts are the Swiss market on the left side with SIX and the German market with Deutsche Börse for the audience to know. Moving on to the next slide, we're looking at the underlying Bitcoin markets across OTC desk and crypto exchanges. On the left side, you got the 2% order book for Bitcoin and the US dollar. And then on the right side, Bitcoin Ether realized volatility. Alessandro, you mentioned that the market has become more mature and liquid, especially compared to the market crash in 2020, as well as all that we experienced before. given the fact that we have more market makers coming into the asset class, given the fact that we have, of course, exchange traded products, 99% of the time, investors are able to come into the market, which is quite impressive. So tell us more about the other side of the iceberg, which is the underlying Bitcoin markets.
So for the underlying Bitcoin market that also represent the main layer of liquidity for the crypto ETP, we saw that the liquidity, as you can see from the chart on the left, that is the 2% order book depth, the liquidity shrunk to 1/3 of what was before. This reduction in the liquidity can also bring and lead to increased volatility, as the order book is also unable to absorb large orders or a significant level of orders. So the drop in liquidity in the chart, you can see from the narrower green bands compared to for instance, the days before. As you can see on August 5th, it's narrower. And also additionally here, looking at the Bitcoin volatility smile. So here we can see the implied volatility. We can see how on the 5th of August, what was the situation. So the near-term expiries had higher implied volatility when compared to further out expiries, which indicates technically a backwardation market and an increased short-term uncertainty. But here, this also leads us to the next level, to the next slide, that is, what can we expect next? And so here, from this slide, and to answer this question, we need to analyze how basically the liquidity changed from the 7th of August onwards. And as you can see from the chart, the liquidity, the one on the right, the decrease in liquidity contributed to a spike in volatility, but also went back to previous levels quite fast. Also, from the chart on the left, you can see how the realized volatility peaked between the 5th and the 6th of August, and then already on the 6th started to go down, coming back to levels that were more or less twice what we had during the weekend, but still went back quite quickly. And also, what is important here to highlight that the events that drove this effect in the market were more, as we already said, akin to the COVID-19 pandemic, rather than something strictly related to crypto. And therefore, for instance, looking at the volatility, when the COVID-19 hit in 2020, the volatility on Bitcoin had a big spike up to 240%, while on Monday, the spike was only 80%. That is more or less similar to what we have seen when there was the launch of the Bitcoin spot ETF in the US.